That is accurate. Now, you say eliminate, which is very strong language. In the tax world, we use avoid. Eliminate sounds like you're trying to just evade, which is illegal. And there's a big defining difference between evasion and avoidance when you're talking about internal revenue code, right?
That's a good point.
Evasion is the illegal not paying of taxes, and avoidance is the legal not paying of taxes by using the tax code to your advantage, which is what we do.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Malcolm Jarrell, is a wealth strategist and licensed life insurance agent who works closely with real estate investors. He focuses on structuring businesses to protect assets, reduce or eliminate taxes, and help investors retain more of what they earn. He specializes in advanced trust structures, private wealth strategies, and systems designed to move investors beyond basic LLC setups into long-term, multi-generational wealth planning. Malcolm, thanks for taking the time today.
Yeah, man, absolutely. And that was quite a mouthful of an introduction, so very much appreciated. Thank you. I love that.
Now,
Um,
most investors, Malcolm, think an LLC is enough. At what point does that stop being true?
right. So an LLC is in our world, it's like the training wheels, just the baby steps of starting out real estate. So what it does is it offers your basic separation between you and a separate entity, for legal purposes. So it's just one veil further away from you, but still it's pierceable. So what I do is I find out when is the optimal time to switch you out of the LLC and into a more stable structure, one that's time tested, one that's been around for over 70 years. And then we look and see, how do we structure you properly so that you are properly protected? I say properly, optimally protected against frivolous lawsuits, and see if we can get you some further tax reduction than what your mainstream entities like a 1031 exchange can do for you, or cost segregation or accelerated depreciation. Those are things we look at to find out, can we do better for you than what your current structures and strategies are doing for you? And most times the answer is yes, but we always want to do a one-on-one to see if it does apply.
Now, walk me through some of these, maybe without giving away all of the gold, Malcolm, but walk me
Sure,
through
man.
some of these structures that people can look at outside of an LLC.
Sure. Well, particularly in what we do, like you said, we work with trust structures, and there are many of them. But the main one that we work with is it is non-grantor and irrevocable in nature, like truly non-grantor. There are some trusts out there that claim that they are, but when you get to the inner workings and the tax filings of it, that's when you truly see if they are non-grantor or not. Ours
Can you break
truly
that down
are.
for us? Non-grantor?
So non-grantor means that you aren't owning the trust itself. So the trust is its own entity, and it being irrevocable in nature, once you move assets into the confines of the trust, under the housing of the trust, it can't just be easily taken out. So that's one level of protection for you. The other is because it's non-grantor, it has its own EIN. So it files its own taxes separate from you. So it has its EIN where you have your social security number.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So when you go to file taxes, you file separately for the trust and for yourself. That way there's no commingling of tax filings or, what can be held against you versus what can be held to the trust. And that's just one aspect. The other part is because it has a spendthrift provision on it, it actually protects the trust from its own beneficiaries. And if you don't know what a beneficiary is, anybody who's in the real estate world and in the insurance world understands what a beneficiary is. Someone who benefits other than you. You work as a fiduciary, another fun word. Basically, you're the financial and legal overseer of the trust to make sure that all the assets held within the trust are for the benefit of those who are to benefit from the trust, which are the beneficiaries, and not the manager, who is the trustee. And the spendthrift provision doesn't allow anybody, not creditors, not a bankruptcy court, not divorce court, to force a distribution from the trust. So assets truly are protected within the trust that we work with. Yeah, I mean, it's a very powerful tool that it's highly underutilized. And, with the IRS, there's warnings out there about not using sham trusts, which do exist. And a sham trust is one that is set up incorrectly and used incorrectly. So yes, obviously look out for those because you don't want to be in an entity that isn't actually going to work for you and that will actually potentially get you in trouble. And what we want to do is make sure that you are set up correctly and you are compliant.
What are some of the tax advantages of this structure, or is that separate from it? Is that separate from the trust structure?
No, it actually is built in. There are some tax advantages built into the trust. So I won't get too deep into the tax code because it depends, which entity you're currently structured in and what you're going to use. But it is built into the trust that we follow the tax code to the T. Specifically dealing with real estate investors, you guys, you get hammered with capital gains tax, right? That's a tax that every investor that I talk to is concerned about. It's like, how do I handle my capital gains tax? How do I reduce it? How do I defer it? How can I mitigate it? Well, when you work within the confines of the trust structures that we offer, your capital gains tax is, I don't want to say indefinitely deferred, but it's deferred until you take a distribution from the trust. And because our trust is also discretionary, it means you don't have to take a distribution from the trust on an annual basis, much like some other trusts do. So as long as your assets sit in the trust untouched in the corpus of the trust, and of course, again, we can go round and round about tax code about this. We have court cases proving that this actually is legal and does work. Your capital gains aren't taxed when held in the trust. So it's all about how you structure the asset before and after it's sold. So make sure that you're using the right structure. An LLC, you're taxed. An S corp, you're probably taxed. That's what people see. That's why we use a 1031 exchange, which has really only been around since 1984. And our trusts have been around for considerably longer.
If we combine the 1031 with the trust, does that compound the effect in some regard? Walk me through what that process looks like.
Actually, because there aren't capital gains taxes to avoid or defer any further, there's no need for a 1031 exchange. So you just do away with it altogether.
No kidding. Okay. So if someone has a rental property and they are potentially selling that rental property, they're able to eliminate a great share of those taxes. Is that accurate?
That is accurate. Now, you say eliminate, which is very strong language. In the tax world, we use avoid. Eliminate sounds like you're trying to just evade, which is illegal. And there's a big defining difference between evasion and avoidance when you're talking about Internal Revenue Code, right?
That's a good point.
Evasion is the illegal not paying of taxes, and avoidance is the legal not paying of taxes by using the tax code to your advantage, which is what we do.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So yes, above and beyond what the 1031 exchange can offer someone who's working within a rental property that they want to sell a property, yes, absolutely. If the property is within the trust first, then they sell it, then those gains are held into the trust and not taxed until a distribution is made, which is super powerful.
Evade is bad, avoid is good. Okay, I've got the distinction.
Yeah, evade is bad. So, I mean, if you want to look at the textbook definition of evade from the IRS, it just means the failure to pay or deliberately underpay of taxes. And avoid is, structuring things in a timely manner, making sure you're using the right structure and using the Internal Revenue Code to your advantage to legally avoid, reduce, or defer taxes.
Now, you're also in the life insurance space. I would be remiss if I didn't ask you your perspective on the infinite banking concept. And it seems like every time I'm in the life insurance space on here, they talk about this. So what's your perspective on infinite banking?
I love it. When it comes to working within the confines of the trust, the infinite banking structure works phenomenally. It was one that was coined by R. Nelson Nash, one that is highly promoted by, Garrett Gunderson. And when used correctly, you can use it as part of your asset, as part of your portfolio within your trust and within real estate. They all work hand in hand very well. So when it's structured properly, yeah, absolutely. Now, what I will caution anyone who's listening, and even yourself, is if you're going to use infinite banking, please use the correct policy type. The incorrect policy type would be an IUL. Please do not use those. They are not structured properly. If you want to know how to structure properly, that is something I will work with you one-on-one. I'm not going to drop names of carriers, but I will tell you that the carriers we do work with, when we build you a policy, it is truly an infinite banking. You do become your own banker. It creates family wealth that is abundant, just like the Rockefellers did.
Now, when people want to get into infinite banking specifically, I think there's a lot of people who hear this and they think, well, that sounds great, but there's also a level of consultation and continued consultation that probably needs to happen in order for people to really take advantage of that. And so when folks are reaching out to you and they're interested in it, but don't know exactly what the process is, what do those initial conversations look like?
I love that question. So the initial conversations, we try and figure out what is your goal with your inventory, your money, your finances. Where do you stand with your family? Where do you stand with, do you currently have insurance? Some people have insurance with their place of employment. They're like, oh, I have, XYZ policy with my employer. And, that's good enough for me. What they don't understand is those are rented policies. They aren't typically owned by them. So they can't truly expand on that. So when we're looking at the bigger picture, which is how do you want to benefit from this policy? What do you want it to do for you? What do you want it to accomplish? That's what we start looking at. How old are you? What gender are you? Are you fit? Do you have underlying health problems? We look at the big, and I say big picture. You as a person, you as a parent, you as a spouse, you as a business owner, because business owners can also have their own separate policies. Same thing with partnerships. Partnerships can have their own policies within a business where they can also use that as an infinite banking policy. Not typically, but we can. But the consultation is, who are you? Where do you want to go? And how do we get you there? That is typically the flow of the conversation.
Now, separate from this, but it does tie in here. When folks are coming to you, they have, their bookkeeping, their books in order. And how does that play into overall the scope of their wealth picture?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
It makes it infinitely easier to work with them because number one, that shows us they're already financially intelligent and willing to do what's necessary to make sure their finances are kept in order. The person who comes to us with no financial idea of what's going on, they're actually kind of easier to work with sometimes because they are moldable, they're teachable, they're trainable, and they're looking for a solution. Those who have their books in order, who are also looking for a solution, they're also easy to work with because we know they understand the flow of money and how to use it as a tool. The money isn't the goal, it's just the tool, and we know how to work with them.
Now, bonus question here for you, Malcolm.
Sure, man.
You've worked with lots of folks, I'm sure, from various different circumstances and situations. And a lot of this can be emotionally charged, I imagine, as well. When folks are coming to you, is it most of the time because they are looking to plan for the future, or is it because something potentially adverse has happened and they're realizing, I don't want to have to go through this again, or something similar?
Man, that's a loaded question. The clients that we see, they all have their goal in mind. They all have their different situations. Some come to us from a place of pain where they've paid taxes. Some have already been sued. Some are learning from the pains of others and they just want to they want to be proactive with their structure and how their income is classified. And so we see all walks of life. We see all income levels. We see all business structures. I mean, so like just a quick example, one of our smallest clients had a $30,000 tax bill, business owner, and we were able to help them restructure their business, help them restructure their cash flow, and ultimately give them that 30,000 back. They were able to recapture those taxes and reinvest that back into their business. And that's one small example. Another larger example, we're currently working with a client right now. He had 40 million in income and close to 700,000 in taxes. And he's a real estate investor. And if you can understand, 750,000 in taxes is a lot, significantly more than most people make. But and because we know what we're capable of doing, we are showing him as we're going through this, like, look, this 750,000, you're going to recapture all this that you can put back into your business. So it's a significant change in night and day between who we work with, whether it's business owners, whether it's investors, whether it's somebody who's, married, one spouse has a W-2, the other one's a real estate professional. That's a very common theme among high earning W-2 is somebody is doing real estate because they need those tax deductions. They need those write-offs. So when we show them, hey, you can get out of the W-2 and focus more on your real estate because here's how we can get you to recapture all those gains that are being taxed, then they feel more confident moving forward because they have the right structure in place to then capitalize on what they're going to be doing going forward.
That's a great point. And I've really been thinking about this a lot as I've had a diverse range of guests on the show. Some people use real estate as a way to recoup taxes that they've paid in through a W-2 job, right? And people aren't even
Absolutely.
about this because if you're high earning W-2, you may just be thinking, okay, well, this is what I have to pay through my job, but you may be entitled to some of that back, especially if you're investing in real estate or a full-time real estate operator. We are coming up on time here though, Malcolm. Any new projects that you're working on? And then as well, what's the best way for folks to reach out to you or your team?
Any new projects we're working on? Honestly, man, every day is a new project. We find a new client that needs our help, that wants to do what we offer, to get in the infinite banking, to restructure underneath one of our trusts, whether it's a business type trust or one for their family or one for, a real estate syndication. We work with all of it, especially oil and business royalties or not oil and business, oil and gas royalties. Like we touch it all. The best way to get a hold of us is there's two ways. You can either email us at info@automateyourlegacy.com. or you can meander over onto our website, automateyourlegacy.com, and just hit the schedule an appointment now and get on our book so we can have a one-on-one complimentary consultation with you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.